Hello and welcome to this week's Australian Stock Market Report. Now this week we're going to look at areas in our stock market likely to see significant growth in the coming years. Then we'll get into the Australian stock market so I can share with you my thoughts on where it's heading, along with answering your questions and looking at stocks for you. I'm Gillham, the Chief Analyst here at Wealth Within, and we're Australia's most trusted stock market educators. Now before we move on, thank you for showing your support for our channel and hitting that subscribe button. Now remember, as you subscribe, click the bell on the right of it so you keep up to date with our latest videos. Also, remember to tune into our live Australian stock market show, which is on every Tuesday night, 7 to 8 p.m. Australian Eastern Time. Now this is the show where you get to ask us, the stock market education and trading experts, to look at your favourite stocks and answer all of your questions. Now one of the secrets to investing is to find areas that are likely to grow consistently year on year. Now a lot of attention in the last few years has been on the technology sector, which has certainly delivered results. However, two areas that have not gained as much attention are alternative energy and cannabis, which I believe will grow substantially in the years to come. Earlier this year, cannabis stocks took a big step forward after the TGA finally approved the sale of low-dose cannabis oil, or CBD, without a prescription. Currently, Americans spend around $13 billion on legal medical cannabis, and forecasts indicate that by 2025 this figure will rise around 131% to $30 billion. So how will this benefit Australia if the US produces its own cannabis products? Well, like the US, it is also forecast that Asia will experience significant growth, and the Australian climate is perfect for producing cannabis. Given our proximity to Asia, our stable currency, good track record with our Asian trading partners, and a willing, stable workforce together with a good regulatory environment means Australia is very well placed to meet increasing demands for cannabis products. Given this, the question investors should be asking is whether the time is to be investing in cannabis stocks. Now there are three stocks in no particular order that I believe are worth looking at. Now the first is Incanex Healthcare, or IHL, who develops medicinal cannabinoid pharmaceutical products and is well placed to benefit from increased demand as it's capable of expansion and exporting globally. Next up is Ecofiber, or EOF, and while it's not into medicinal cannabis, it is in this developing sector and has grand plans of being the global leader in hemp technologies. Now Can Group is also worth looking at as it is Australia's first company to be licensed to cultivate medicinal cannabis, and its vision is to be a leading supplier of cannabis and medicinal cannabis products. Now it's time we get into the market, and to start off we'll take a look at what were the best and worst performing sectors last week. Well, the best performing sectors included financials, and that was up 2.01%, followed by consumer discretionary and information technology, with both up 1.96% last week. The worst performing sectors included energy, and that was down 4.31%, followed by materials, and that was down 1.39%. And communication services, that was down 0.95%. Now the best performers in the S&P ASX Top 100 stocks included Altium, and that was up 7.29%, followed by Worley, and that was up 6.76%, and Magellan, that was up 6.71%. The worst performing stocks included Mineral Resources, down 9.2%, followed by Alumina, down 8.37%, and Woodside Petroleum, that was down 7.59%. Now before we get into taking a look at the charts, remember, if you want to understand the stock market and have more control over your trading, then you can get a copy of my first book, How to Beat the Managed Funds by 20%, for free. All you do is pay the shipping. Now to get your copy, just visit our website wealthwithin.com.au or give our team a call on 1300 858 272. Now moving on, what do I expect in the market moving forward? Well, let's get into the charts for our S&P 500 All Ordinaries Index update for this week. We'll also answer your questions and look at the stocks that you've chosen for me. Well, the Australian stock market ended up again last week rather than falling ways as I thought it might do, but one thing it is doing, and I'd certainly know it's doing is it's still showing lots of signs of indecision, which is not really a positive, but looking at the market obviously going up for the last couple of weeks is a positive sign. So have we finished our downward move, yes or no? And that's the question we're going to ask or answer today on this show. So let's go and have a look at the charts. Now on the screen, you'll see that on the left is the monthly chart and on the right is a weekly chart. Now it looks a little bit different than what I normally would have on there. I'm on a different computer, it's a smaller screen, and all my tools aren't on there. My other computer wanted to go to the shop to get fixed a little bit. But let's go and have a quick look at the monthly chart just while we're seeing it here. And you can see I've just drawn just a momentum line. I've just used the trend line tool just to show you the momentum that I've shown you a few times before. And I'll just expand it out to look at what's been going on right now. And you can see this month we've just moved and we're staying above that line at the moment. We were struggling to break through it through here. We opened there, pushed down, we didn't make it through there. We were struggling around it through in September. Now October, we're above the line and we're staying above the line, which is good. I mean, if we did finish October with a close below that line, I would suggest we may be starting to fall over again. Sorry, this is the weekly chart, not a monthly chart. I'm sorry for that. And looking at that, but you can see here, if I just really do bring it up a little bit larger so you can see we've had 1, 2, 3, 4, 5, 6, 7 weeks down to that low into October. I don't think it was long enough. It was in the right time. We just didn't go enough in terms of price in my eyes. And I'll just bring up the tool that I wanted to do and show you, just so you know exactly what sort of happened there. So the market went down about 5.7%. It's not exactly 100% accurate, that figure right at the moment, because I haven't specifically locked it on the end of the high and the low there. But you can see 5.71%. I was expecting 8 to 12%, and I thought it'd be at least 8%. It's a bit shy. So this week, probably this coming week, we'll actually know whether it will start to move down into a low, and maybe the low might happen in November. I think we're getting a bit too long in the tooth, but I do think we always need to be prepared that the market will do whatever it wants to do, and we are in reporting season for the US at the moment, and all the reports are fantastic in the US at this point in time. We're getting some good reports from our companies as well, or we have seen some good reports from our companies as well, and we are opening up as a country, so it might be a good thing this next coming year for the Australian stock market. Now, I want to take you into the daily chart just to show you what's been going on the last few days. So you can see here we've got Tuesday, October the 19th there. And going back, it was very much indecision right through there. You can see how it opened, pushed up, came right back. Then we've got Wednesday, big strong bar, but it came back to around about half of the bar, or where the half of that bar was. So that was last Wednesday. Then we've got Thursday there. We opened up where we closed the day before, pushed up, came right back and closed where we opened within 1 point. And we did the same again on Friday. So Friday was a down bar. So we've got 1, 2, 3 of the last 4 days on our market is very much indecision, where the range between the open and closes in all these bars is 1 point basically. And so if we go back to the previous week there, we can see the big close there. That's the open on Monday of last week, and that's obviously the close on Friday. So we had 2 nice bars moving up. Both of them exhibited weakness. You can see this one again last Monday, it pushed right up to that high of 7705 and came right back to close down at 7689 points. So it's not moving on as fast, but you can see here how many days it's been since a low. So here 1, 2, 3, 4, 5, 6, 7 up to that point. So it is due for a pullback a few days. So and I would expect our market to pull back for a few days this week. It may even pull back for the whole week. But it probably wouldn't equally be as strange to see another green bar through here moving up. And for a market to be really bullish, I would hope we would get a really nice strong bullish bar with a low open and a high close. If we saw that, then this high over through here will get broken at 7902. All-time high will get broken, but we just still need to be a little bit more careful at the moment, a little bit more selective of what we're buying, because it will come back in the next few weeks. We will see a downward move, whether it's this week or next week or the week after. We will see a downward move, just like we do on any bull run. So you can see it move up and it comes back down for a couple of weeks. We move up, comes back down for 1 or 2 more weeks. It does that constantly. See, there's a couple of weeks down in this bull run through here. And you'll see 1 week down here, 1 week down here. So it's pretty normal for the market to go up and down in a bull run and then down and up in a bear run. So we've just got to decide whether this is just an upward move in a longer term bearish move, or whether this is the start of the new upward move. If this is the start of the new upward move, it really does It concerns me a little bit because the faster the market continues to rise, and we've seen the market from that point there in March last year is risen the fastest it's pretty much ever risen, and I can't find a time where a market's risen that fast. And what happens is when a market does rise that fast, and if it continues to do so if we still see our market continue to rise really fast, then the bigger the fall is going to happen on the other side. And that's really why Janine and I really did want a little bit more of a bigger pullback. We wanted to see at least an 8% or 12% sort of pullback, just to take a bit of air out of the tyre, so to speak, and a little make the next move up a lot more sustainable. So whilst this next move may be really sensational, it may move up really, really strongly, once it starts to gather momentum, it will entice a lot more, inexperienced investors into the market, thinking that all they're going to do is make money on the marketplace, and it creates a false sense of reality. And we've seen this so many times, with the GFC, prior to the GFC, we've seen it with the tech boom, etc. People that are getting in the market with not a lot of knowledge, and they keep putting more money into the market. They start borrowing things, on credit cards, lines of credit, from their housing loans, all sorts of different things, and putting money into the market, whether it's ETFs now or whether it's physical stock. And the market will go up, but eventually the bubble will burst. And so that's why I really do hope we get a bit more of a pullback before we start taking off. But if we do take off, just get ready to buy. I think there's going to be some great buying opportunities through into November and possibly December. November and December, generally good months on our market, so January. So I think the next 2-3 months will be a very good months on our marketplace. But we're just seeing a little bit of indecision. That's why I'm still sitting on the fence a little bit about whether we're going up or whether we're going down. Always protect the downside, let the upside handle itself. If you've got stocks that are going up, stay with them. If they start going down, you've got to get out of them. But just be prepared at the moment, because we are on that edge, if that makes sense, that we either could be going up or could be going down. But just sit back for another week or so and we'll understand that. And the next few weeks really will sort out what the next medium-term view is, the medium-term trend is, as I should have said. And as at the moment, I'm starting to really lean towards it's going to be more bullish, but I'm still wary about it being bearish at this point in time. But now's the time we get into your questions for us. Okay, the first question that we have today is from Andrew. He says, "Hi Dale, great show. How come ASIC don't look at PIP traders who may put in a $10 million sell order at, say, 8.8 of a cent or 8 cents, and a $10 million buy order at, say, 0.07 cents?" Really good question, and the reason why they don't do it, it's about manipulating the market. Now, anybody can place a trade and place a stop order or an exit order at the same time. So it's basically, you can call them like if done orders. So if I buy here, then this is my next one. So if this gets done, I'm going to do that one. So you can do it on the up and the down. So they're just doing it on the down. So they're putting in a sell order to sell at this, to buy back at this, and then get the profit in the middle. And a lot of people do that, and we see people do that who don't really have solid exit strategies. They're just taking little bits out of the market. And I see this a lot of times with new traders, is they try and get $100, $200, $300, $400, $500 out of the market in a day. And that's what they try and do. And it's simply because they sort of get momentum. They buy a stock or get into a market and get it on a momentum, and then hopefully just get a few pips out of it or a few cents out of it to get a few dollars back into their pocket. And they do that because they don't really have solid entry rules. Is it illegal? No, it's not. It's definitely not illegal, because they're not ramping the stock, or they're not artificially trying to ramp it. They're just saying, here's my order, and if that one gets done, here's my other order. And the market can see that perfectly clearly. What is illegal is when you get unlicensed people giving financial advice or perceived financial advice. Do I think people, big institutions putting in orders to push the market around, do I think that's necessarily fair? No, I don't. Do they do roughly what the pump and dumps do? Yeah, they sort of do, but it's perfectly legal for them because they're fully licensed. And that's the main difference when we're talking about chat forums and we're talking about YouTube videos and all sorts of social media and people, TikTok and all those ones where you get people put a camera in their face and they start talking about a stock, or they're saying buy this stock now, the hottest stocks to buy today, or you should be buying these stocks. I love these stocks. These are the stocks I've bought for my portfolio. You should look at them too. All of that, these people are unlicensed. There's probably only one person out on YouTube other than us that I know of that has an Australian financial services license. We have our own Australian financial services license. I'm licensed under that to talk about the stock market, talk about stocks. I'm a responsible manager of Australian financial services license. I don't know anybody else other than one other person on YouTube that has that, which means anybody out there who's talking about stocks is doing it illegal against the Corporations Act, and ASIC will look at them. So because it's about, but if a stockbroker starts talking about a stock, they're licensed, so they're allowed to do that. So if they send out information in social media and say, we like BHP, blah, 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 for these reasons, and they push out a lot of information on that, then they're essentially pumping that stock. And they do pump that stock. And they're hoping people will buy it and obviously take the price up. But then they have research teams behind them and give a reasoning behind that, but they're putting out that information. But the difference between them and somebody who's unlicensed is ASIC is in there all the time regulating what they're doing. And if they say something that's incorrect, and this is the important thing, if they say something that's incorrect or misleading, then they are very liable and they can be put in jail, fines, all of those sorts of things. It's just that they're licensed and they have certain processes and procedures they need to go through and the compliance they need to adhere to. Anybody on YouTube has no compliance they have to adhere to, or TikTok or Facebook or Instagram or those sorts of people. They don't have compliance. We pay tens of thousands of dollars every year for our license and having compliance done so that we do the right thing by everybody, and we're giving a good solid education and information so that you can make informed decisions. That's what ASIC's saying. They don't do that with all those social media people pushing around, pushing out videos and comments around products, investment products, whether they be ETFs, whether they be stocks, whether they be a managed fund or something else, or superannuation. They're all products that ASIC regulates, and so if people are talking about that, then they will get the attention of ASIC if they're not fully licensed. But thank you for asking the question. Now we have a question from Mr. Hondros, who says, hi Dale, thank you for that info. He's talking about a question that I answered last week, I believe. Now another stock I'm looking at is RRR, Revolver Resources Holdings. It's a new stock and would like to know if it has long-term growth. Also, what program do you use? Thank you in advance. Okay, so let's go and have a look at the stock here, and I'll just bring, it's on your screen at the moment. It's called RRR, River Rock Energy, and he's asking me if it's got long-term. I don't know, I have no idea whether this has long-term possibilities at the moment. It's just not possible when you're looking at a weekly bar chart and it's brand new on the marketplace. You would need to do a lot of research yourself when its fundamentals, its reports get into ASIC, and that's not what I'm going to do. I don't do for this sort of report. I'm looking at the charts. It looks okay at the moment. Obviously we've got 1, 2, 3, 4, 5 weeks. We've got, this is quite very indecisive in terms of what it's actually doing, but I wouldn't be surprised if I see 1 or 2 weeks down. But over that, if it starts to come down through here, generally with floats, obviously this was a float 5 weeks ago, generally about 50% of the time you'll be able to pick them up cheaper in that first 12 months, and that's about 50% of the time. It's pretty much one of those things, you flip a coin and you could be buying it in the next 6 months cheaper than what it floated through here, and there's that low of 22 cents. So I can't tell you whether this long-term bullish. Short-term, it looks like it's fine, it looks like it's pretty good, but I would expect 1 or 2 weeks down through here, and then after that, if it starts to move up, then I would say it's probably looking good for medium-term, but I can't give you any long-term view. I just don't have enough data on it, and I would need to do a lot of fundamental research, so I would be looking at its forward projections, what it's putting out to the market, its announcements, what it's doing, is it profitable, you know, what's a debt ratio, all sorts of things I'd be looking at to determine whether this would be a stock for my portfolio. You just can't pick it up on the chart at the moment. From that, I'd need to do a lot of fundamental research there, but thank you for asking the question. The next question we do have is from Ali Noon. He says, maybe a basic question, though, how exactly are stocks priced on the stock market? It's probably, it is a basic question, but it's a really good question because a lot of people don't understand how stocks are priced on the marketplace. Now, obviously, in a stock like we just saw, which is called, what I say, River Rock Energy, it floated. So how is that priced on the market? So what they do with a float like that is they produce a prospectus and they'll put out what they believe the company's worth. So they'll do their balance sheets, all the different things there, and they'll come up with a price of how many shares we're issuing, what value we think the company is, and we'll put a dollar value on that, whether that's 10 cents, 20 cents, 30 cents, $10, whatever that is. They'll put a value on that, and then they'll sell the shares to through that IPO through to the public and institutions. So they would release that to institutions and say, well, they might give institutions, say, a little bit of a discount to that price. Sometimes they do, but it's really based on the value of the company and how many shares they're issuing. And once the institutional side of towns have taken up their allocation, sometimes it all goes to institutions and retail traders don't get any portion of an IPO. Other times they split it. There's all different ways that the brokers do it when they're underwriting an IPO. But basically, to really answer your question, they come up with a valuation based solely on what the company's worth, what they believe it's worth. Because if you own a company and you want to open it up to shareholders and list on the exchange, you probably want to get as much for it as you possibly can because it's your business. So it's generally saying, I've got this, do you want a piece of that? And you go, yeah, well, okay, it's going to cost you X dollars per share for that. So that's how they do that. When you're talking about that, that's the primary listing or primary function of the market is to really list companies on the exchange. Then we have a secondary market, which is really what most people do, which is they're buying and selling shares on the exchange itself. So when you're buying and selling stocks like BHP or the banks or whatever else, you're actually buying shares that are being owned by somebody else, not the original owner of those, if you get my drift, with an IPO. So when an IPO is that the original owner selling those shares into the market and listing it onto the exchange. So that's how you get shares initially, or a primary way you get shares, but the secondary way is secondary trading on a market like the ASX. How are they priced? It really is, what they do with the market is in the morning before the market opens, they see all the pre-orders. Most people, when you're trading on the market through an online broker, you can't place an at-limit order outside the market hours. So you'll start seeing all the orders go into the order pad of buying this stock, this many shares on this stock, and I'll set a limit price of X. So people will do that. Now, just before the market opens, the ASX knows what's going on because they see all the orders coming through. And what they'll do is the opening price, they'll just on that few seconds or that first few seconds the market opens, it'll balance it all out, and then they'll get sort of roughly an average price of all the board orders around those levels, and that's where the stock will open at any one day. And from that moment on, the initial opening, then it's what other people will bid and ask for that price. So somebody who owns it, what are they asking for the price? What somebody wanting to bid for it, they might put in a bid lower than the ask, and eventually they'll match up and then they'll trade. It's just what's my perception or what I want to get out of a stock if I own it, and if I don't own it, well, how much do I want to pay for that? Now, you might trade with no limit price on your buy, and you might just get at market price. So you place an order in to buy 1,000 BHP shares at market, you'll get whatever the price is or the asking price is at that time. But you might also set a limit. This is the upper limit that I'm going to pay because that's what you believe it's worth. So there's two different ways of doing it. So really when you're talking about the secondary market, which is the ASX trading of stocks, it's really what the buyers and sellers want, like an auction at a house. You know, how often you've been at an auction at a house and you think, oh, this is worth X dollars, but it goes way above it or it doesn't get to that. And, you know, and this is the interesting thing to me when you see the reports on the TV about the auction prices. You know, this house went, 20% above auction price. I don't generally in a nice bullish sort of property market, generally houses will always go 10 plus 20% above what their reserve price is. So I don't think it's a sensational news, but that's what they make it. But it's the same thing. You just got two parties bidding for it. That's how they come up with the pricing on the stock. So hopefully that did answer your question. Now we've got a question from, I've got to try and say this one, Chewbacca Saw, I think is actually how you say that. It's on your screen right now anyway. And they ask, why is it illegal? He's talking about pump and dump. Looking at RHI stock that has a 24% dividend paying out soon. It has risen from 33 cents to $5 this year. This is most likely a pump and dump, and also will it crash after dividend X date? So I pretty much answered the first question, or your first question in my first question. So why is it illegal? Because it's illegal to pump and dump a stock. It is, especially if you are somebody who is unlicensed. So that's really the answer to that. So, and that's what we're seeing people on the media, on chat forums all of the time, talking about stocks and try and get to people buying them. It is illegal, and they have pinged people who are licensed for doing that as well, doing stock reports. That's why I don't like stock reports too much, the stock tipping newsletters, because they can be a sort of form of pump and dump if the person writing the report already owns the shares and starts talking about it, and they push it all up. See, we're not allowed, we don't do that. Like if we buy a share for our clients, and this is probably the big difference, if we're buying share for our clients that we're managing their portfolios on, I might pick a great buy for a stock and I go, I want to buy that stock for myself, but we do want it for our clients. I have to buy it for my clients and then wait at least 24 hours before I can buy it for myself. And so I wait for my clients to get filled on their portfolios before I do. So I have to put myself behind all my clients if we're doing that. So therefore, that's why Janine and I are quite careful about what sort of stocks we talk about and don't talk about, because we don't want to be pumping and dumping, if that makes sense. So whilst we like our stocks that we pick for our clients to go up, we're not there to pump and dump stock. We're trying to do everything on the above board. So you do really need to be careful of where you get your information from. And I said, I've seen people with stock tipping newsletters using those for them to make money on stocks that they own or they're wanting to sell. So they may have already had a stock that's risen quite strongly, possibly like a stock you're talking about here, and then they put out a report saying this stock's great, and then they sell into that demand that they've actually created. I've seen that sometimes happen at the big end of town, and people do get put in jail from it. There's a high-profile case, probably 20-odd years ago, was that Rene Rivkin case. He got put in jail for that. I think it's 20 or 30 years ago, in the 90s, early 2000s, something like that. He got put in jail for doing exactly that same sort of thing. But ASIC do take a dim view on people trying to do that. So let's go and have a look at the RHI. Now, you're saying it's paying a 24% dividend soon. Now, this stock is just gone ballistic, obviously, and you can see how massive it's moved. This could be a pump and dump stock, but I think there'd be some sort of announcement somewhere around July here to see it to do this. Could be a takeover, whatever it is. I'm not sure whether it has been a pump and dump stock, but you'd actually be able to work it out. Paying a 24% dividend, I'd like to know whether they've actually announced that they're going to pay it, or whether that's what the dividend yield is at the moment based on its current share price. Because there's two separate things. They need to announce, if they've announced that they're going to pay a 24% dividend, then that's great, then they will pay it. But if they haven't announced it to the marketplace and the current price of the share to the dividend yield that they're paying means that it's a 24% dividend yield is a different thing, because they may come out and announce a lower dividend rate. Generally, a high dividend yield is a sign of a stock going bearish, but this is the opposite, isn't it? It's really gone bullish. So I really can't tell you in terms of where it's going. That's not why I made that mistake before. It is looking like a bit of an illiquid stock to me. I'm going to go down onto the daily chart, and it is quite an illiquid stock. You can see here days where it's just opens and closes at the same. So there was 59 shares traded on that day, and this is just October this month. We've got 681 shares traded on that day, this day here. So it's not a big, it's 18,000 shares traded on that day. So it's a very low liquid stock. So it's probably in that ball game for something that would be a pump and dump stock. So just be really, really careful about it. But hopefully I've just answered your question. Now we do have another question. I think it's from Rolsey, and it says, "Hi Dale, interested in your thoughts on DGL, bought at $1.48 and has seen a nice increase. They have made some good acquisitions over that time, and wondering your thoughts on the company and price. Cheers, Ian." So let's go and have a look at this stock. It's called DGL, so that's another red iron, as I said. Illiquid stock, I'd say I'd be very cautious with that one. So let's DGL Group. This looks very, very good, Ian. Looks like a really nice looking stock. So let's have a look at the monthly. I'll change that to monthly and bring it on. Look at the nice, beautiful move here. And this just goes back to that RRR. We talked about whether River Rock Energy would be long-term bullish through here. And going back here, you can see 1, 2, 3, 4, 5 months. We're in month 6. Little bit of indecision here, and we'll look at that on the weekly chart when we're seeing. But that's nice and bullish, and I do like this when I'm looking at this. Now, if I go back to the weekly chart, and I'll bring that up, and you can see here on the open, it opened very, very strongly through here, but then it went down for a little bit, and then it started to move up. That's what I wanted to see for RRR. If we can start seeing a bit of a downward move and finding some support and then start to move up, then I think it would be a good medium term. Right now, I do like this stock. It's not surprising that it's probably coming back a little bit. It wouldn't surprise me if it came down, probably even down to $2, sort of that sort of area through around here over the coming weeks. But it does look all right. I do like this stock. Very good pick, Ian. Stay with it. Probably the only thing that I would do if I were you, mate, is just to put a trend line up underneath all of this, and it starts to move below that trend line and close a couple of weeks below it. I'd probably exit it and take my money out and then come back later on. But I do like what I'm seeing here. Let me just put some volume onto it, and I'll just type that out. I'm trying to get everything happening on this computer that's not normal. So there's not a lot of volume on here. You can see a bit of increased volume on this day, 2.6 million shares there. But you can see the big volume on when it did float. A lot of people wanted that stock pretty quickly, but be interesting to see what it'll do over the next few weeks. But a lot of big volume going through there on that Wednesday there, and reverse through here. Just be careful a little bit, Ian. That's all I'm saying is I do like your pick. I do like what you're doing. It's a really nice trending stock, but don't be surprised if it starts to fall away. If we see a nice green bar through this week, then it'll go through it and stay with it. Make sure you got a stop loss, whether that's a trend line or a trailing stop loss like a trend line, or whether you have another type of line in the stand. I think you'd be best to do that. But good one, Ian. Really good pick. I do like that one. Now, the next question we have is change for the better. It says, what shares do you need to buy in next week? I'm not going to answer that one because that's not what we do here. And, to me, if I'm never going to say these are the stocks you should be buying next week or next month. It just doesn't. It's all about you making decisions for yourself. And because we're about empowering people, that's what we do. Janine and I are about empowering you with information and education so you can make better decisions. And so whilst all of the questions that we've had today are from public subscribers to our channel, and I've answered those. So if you haven't had your question answered, then maybe you might choose to be a public subscriber to our channel to ensure your question will get answered. But I'm not doing a stock tipping report here. This is YouTube. It's free. It's really about education for us and helping you understand the market better and stocks you're looking at better. It really, Janine and I'll go buy this week. And I can't remember us saying buy that this week. We don't do that. So you need to do your own research, pick up stocks. If you've got a stock you want me to look at, please make sure you're a public subscriber and send your question in. So that's what we're here for. But if you are sitting there watching this and saying, I've got these questions I'd really like Dale to answer, look, please, the first thing you need to do, as I said, is publicly subscribe to our channel to ensure your question gets answered. And then just type your question in the comments section below, and I'm really happy to have a look at it. Now remember that here on this channel we do these reports every Monday, every single week, and we also have our live stream every Tuesday night. It's on 7 to 8 p.m. Australian Eastern time. So remember, hit the subscribe button now, click the bell on the right of it so you know when we upload and go live. Also give us a big thumbs up to tell us you like what we're seeing. So anyway, I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck and good trading.